Good afternoon, this is Brad Dennis with BIS Commodities and your wrap-up for the first week of September. Coming out of the Labor Day weekend, we saw explosive prices in beans that did not hold. If you go back to Tuesday morning, Monday night, Tuesday morning, bean prices accelerated to the upside, and we went up and we retested a recent high of $14.09.5. Having not been able to get through that level, we came off and we saw profit taking out of long positions. As the day wore on, more and more profits accumulated, and then Tuesday night you had a sell signal in beans, and we retreated beans all the way back down and made lows around $13.35. So 70 cent, 75 cent range in the first 2 days of trade. And then we started to stabilize a few things on Thursday. Beans started to stabilize a little bit based on weather, a little bit having accomplished their first target after coming off of that double or triple top up there at $14.09. Anyways, where are we for the week? Beans are still higher by a dime. We are still anticipating the yield backing up some. And the drought monitor continues to engulf Iowa. It's going into Illinois, Missouri. So we're seeing yields on beans back up. Not to say that a rain wouldn't help, but we are taking the top ends off the yields. It seems that the trade wants to look at it from two parts. A yield over 41.5 is going to be bearish from our close today. If you have a yield under 40 on beans, you'll probably have a rally up there and test those 14.09s. And that's a debate that will be ongoing. If we don't get expected rains this weekend, or if they are subpar, then we could see another retest. And that's what Mondays have been all about, going to the upside. We'll see what happens this Monday. As far as corn is concerned, we're looking at closing out the week down about 12 cents. Corn is further along than beans, and we're starting to see harvest come in. A lot of people are taking advantage of the premium for the 1st of September in the cash markets, so we're seeing guys go a little bit earlier. Maybe they're paid a dollar plus over what the board price is. They're utilizing that dollar to dry down and actually get the product to the processors. We're seeing good yields from this early harvest as well. We're seeing the fringe areas that usually get burned up every year actually averaging close to 200 bushel per acre. We're still waiting for yields to come into the Illinois and Iowa area. But for right now, with these fringe areas having not been burned up, you're going to hear all good reports. Probably won't take a dive until you start getting into the Illinois or Iowa area, and that's not going to happen for another 2 weeks or so. Funds are short corn right now, and we did see a little bit of pairing of those short positions going into the weekend, but I would anticipate you'll still be a short corn, long bean kind of position. Today in the macro world, we did get non-farm payrolls. Non-farm payrolls were expected to be around 175,000, came in at 169,000. Not a big deal. The big deal was, one, they revised July's payroll data from 162,000 down to 104,000. So what does that do? That kind of shifts the thinking or the probability of tapering to the lower end. Now next week we're going to have an FOMC meeting. They're going to discuss all this and they're going to let us know what they think is right. I would assume that they still pull back about maybe 10 to 15 billion from their bond purchases, just as a starting point. Other economic data has been good, so I think that they have to start paring it back, and it seems like there's some agreement on the board of that happening. Once again, as far as the payrolls are concerned, decent number for this month, last month being revised. Yes, that's bad. You're looking at 7.3% unemployment rate, and that's just due to the low participation. But if you look at the dual mandate of the Fed, it just says unemployment rate. It doesn't say the participation rate. So we'll see if they look by that at all. So next week, going forward, we're going to see FOMC meeting, and that's going to go a long ways in determining whether or not we start pulling back some stimulus. When that number did come out, you saw copper rally, but towards the end of the day, it did pair that rally a little bit. So traders aren't so sure of themselves still. Chinese data was up overnight. Their trade data was up. That helped the Aussie dollar, and that's going to go a long ways to saying that, hey, we're starting to rebuild this global economy. As far as energies are concerned, up over $2 in crude today. You're talking about the Syrian trade. When you look at crude and you look at it from a weekly basis, you're up $3 in crude, yet RBOB is down on the week. Yet heating oil is only up 2 cents for the week. So you're seeing crude run from short-term spec money flying in there, wondering what's going to happen with the Syrian position. Today we had the president talk about it. We had some comments out of Putin, and it looks like each leader is picking sides on this one, and we'll see how it finishes off down the road. As far as the livestock markets are concerned, significant move in the hogs this week, with December hogs closing above that $85 area. Funds are long hogs right now. They added to their longs. We'll see how far they can push it up. Remember, it is a very long fund, and when they decide to take some profits, it can get kind of ugly. So if you're hedging, you might want to look at locking up some prices while the funds are raising them for you right now. Cattle-wise, D's cattle, you're trading a 127, 131 type range. If you look at charts, we usually fall off towards the second half of September. So I would say look at that 127 area. If we can't breach that, then maybe we're basing ourselves going into that latter fall trade. So that is all I have for you for this week. Enjoy the next week. Watch out for the FOMC meeting. Watch the weather forecast. We do have an S&D report next Thursday. That's going to give you a big change in yield in both corn and beans. Acres probably won't be changed at this one. They'll wait until October on that, though. So that is it for the first week of September. Broadcast out.